When it comes to the market, I want to start with inventory because this is one of the biggest stories in the market right now. Across York Region, there are approximately 4,835 active listings, which is up over 20% compared to last year. Locally, the increases are even more pronounced, with Aurora up 46% and Newmarket up another 43% over the same time last year, with East Gwillimbury also up 27%. Now, this is significantly higher inventory than we normally see at the end of November. Aurora and Newmarket in particular are seeing the sharpest year-over-year increases, which means more choice for buyers and even more competition for sellers. Now, let's look at the sales activity, because that's also important. In November, transaction volume was soft across the region, with York Region recording only 893 total sales. Newmarket had 60 sales, which is the fewest November sales we have on record, dating back to around 2011. Aurora, they had 50 sales, also really soft for the month of November, and East Gwillimbury had only 40 sales. Year to date, sales volumes are down meaningfully across York Region, with it down nearly 12%. Aurora is down 25% year over year, which is a significant shift for what's historically been a very stable and desirable market. And while Newmarket and East Gwillimbury are both down, they're really down only about 15%, which when you compare that to Aurora, it's not all that bad. At this pace, Newmarket's on track to have one of the slowest years in recent history for sales activity. With pricing continues to adjust across the region. Median sales price are down year over year, with York Region being down over 11%. Aurora is down about 10% year over year. East Gwillimbury 11%, while Newmarket's down only about 9.5% year over year for the month of November. Also, it's important to note that Newmarket is now seeing its lowest average and median sales price dating back to December 2020. This confirms that price adjustments are widespread and not just isolated to a single community. For a broader perspective, the Bank of Canada held its interest rates in December, which is an important development for the market. While borrowing costs remain elevated, the pause has helped stabilize buyers' expectations. We are seeing fewer buyers waiting on the sidelines for further increases and more beginning to plan their move based on today's rate environment. That said, affordability remains a challenge, and stronger sales momentum will likely depend on the future rate cuts rather than just a rate hold. For now, the market remains cautious, but more predictable. So the key takeaway right now is we're in a market where higher inventory, lower sales volume, and adjusted pricing will create different opportunities, depending on whether you're buying or selling. Each month, our team puts together a detailed market report that breaks down the data further by neighborhood, price range, and property type, so you can clearly see what's happening in your specific market. If you're thinking about making a move in the coming months or simply want to stay informed, our monthly real estate report is a great resource. And as always, if you have questions about these numbers and how they apply to you and your home or plans, feel free to reach out.